The United States has begun its response to the squeeze on Hong Kong by Beijing. China announced last week it was clamping down on the pro-democracy movement in Hong Kong with even tougher and more restrictive security laws. Well, this Wednesday, the U.S. Secretary of State Mike Pompeo has notified Congress that the Trump administration no longer regards Hong Kong as autonomous from mainland China, and this sets the stage for the U.S. to withdraw the former British colony's preferential trade and financial status that it's enjoyed since it reverted back to Chinese rule 23 years ago. Well, Kate Moody's our business editor. She joins us now. Kate, the announcement could end Hong Kong's special trading status with the US. Tell us more about what that would entail. And good evening to you, by the way.
Hi, Mark. Well, that decision would effectively mean that the U.S. would treat Hong Kong the way it treats Beijing, so not necessarily as a close trading ally. It could jeopardize Hong Kong's position as a business bridge of sorts to mainland China, and it would impact Chinese as well as international firms. Now, concretely, in the last few years, Hong Kong has been exempt from U.S. tariffs on Chinese goods in that 2-year-long trade war between Washington and Beijing. That could change if the status is indeed revoked. A change in status could interrupt some $66 billion worth of trade in goods and services between the U.S. and Hong Kong. More than 1,300 American firms have their Asian bases in Hong Kong. They've been lobbying against this decision by the State Department. It could force them to move somewhere else in the region. More than $80 billion worth of direct U.S. investment in Hong Kong could also be affected. It would dissuade U.S. and other companies from investing there. Restrictions on technology sales, export controls, and visa requirements, all of that could be in the balance now. And this, of course, is on top of the geopolitical implications for the broader relations between the United States and China. Analysts reminding us that Hong Kong is always a hot-button issue for regional and the international stage.
Indeed, and we're watching for all developments on every aspect of that story. Let's move on, Kate, to another business headline this evening. More job cuts by the U.S. aviation giant Boeing.
More than 7,000 employees will be laid off in the United States, many of them in the Seattle area where Boeing is headquartered. This is along with the 5,500 people who are taking voluntary redundancy packages in the coming weeks. Now, this is more than 12,000 jobs in total. It's the biggest chunk of the aviation giant's plan to cut 10% of its workforce, around 16,000 positions. There will also be job cuts among Boeing's international workforce. Those numbers haven't yet been released. Now, Boeing's been in crisis since at least March 2019, when the second deadly crash involving its 737 MAX planes saw that popular fleet grounded around the world and saw clients starting to cancel orders en masse. Its financial problems have been compounded by the coronavirus pandemic, which has really wreaked havoc on the airline industry as a whole. Global air traffic has dropped by around 90%, and we're seeing carriers, manufacturers, and suppliers all cutting jobs and costs. Now, at the end of April, Boeing raised about $25 billion in a bond offering, and it turned down financial support from the U.S. government's $2 trillion stimulus package. The CEO said at the time that he was unwilling to take that government bailout if it meant giving the government a stake in the company. Now, as he announced these job cuts this Wednesday, Dave Calhoun said there were some signs of recovery, but he said it would take the industry years to get back to the level that it was just 2 months ago.
Kate, thank you as ever very much indeed. Kate Moody, our business editor, with the latest.